Reddit is set to begin trading later this week, in addition to Aera Labs, which is scheduled to debut on the NASDAQ tomorrow. My next guest believes we will see increased IPO activity in a number of sectors this year. Joining us now to discuss, Erik Hirsch, co-CEO of Hamilton Lane, one of the largest private market investment firms globally. Erik, welcome to the show. It's so great to have you here today.
Pleasure to be here. Thank you so much.
So let's start right there. You got two high-profile IPOs this week, and as we're talking about private companies going public, we've also had a flurry just in the past 2 days of public companies potentially looking to go private. We talk a lot about what this means for the equity market, but what does it mean for the private market?
Well, I think there's a lot of opportunity here, and it'd be hard to have less IPO activity, so I think more is a pretty safe bet than what we've been having. And I think what you see today is a lot of companies have been held now for 4 or 5 years by the private markets that are now looking for an exit. And I think part of this is just understanding where is the new normal. People have been kind of waiting to get into the water, wondering if it's okay. And I think you're starting to see signs that we're adjusting and that people are going to start getting in that water, and we're going to start seeing more liquidity events.
Okay. How much does the Fed matter here? I mean, we've seen higher for longer, a lot of focus, not even necessarily, yes, there'll be focus on what Powell has to say at the presser tomorrow, but a lot of focus on the dot plots and whether we see a change to the outlook there. How much does that matter, especially when we are talking about liquidity events? We are talking about, for example, private equity that's sitting on a lot of dry powder right now, but also we've seen this uncertain environment.
Well, the Fed matters enormously, but I think the market is now adjusting to the reality that we're not going to take rates back to zero. And so inflation continues to be very, very resilient. And I think the Fed is clearly signaling that if there's going to be rate movement, it's going to be very, very modest. And so I think at this point, fund managers understand that that is the reality that they're dealing with. And I think what the private markets need, and frankly, the public markets also benefit from, is just a notion of stability, that this is where we are, this is the environment you need to operate in, and then you go about your business and actually get going.
Erik, I'm inclined to think Aera Labs might matter a lot more as a signal for the IPO market than Reddit, in part because it's not relying on any kind of name recognition. It actually grew 45% in 2023 and maybe represents the type of company that's waiting in the wings here. Am I wrong?
I completely agree. I mean, if you look at the stock market today, we've talked about it, ad nauseum. The S&P essentially driven by 7 companies, all now completely household names, all trading at incredibly high multiples. And I think investors recognize that their very passive approach to the public equity market has left them with very concentrated portfolios. It's one of the reasons why we're seeing a tremendous move of retail capital into the private markets, because they want to get exposure to a broader opportunity set. And a lot of these companies that are never going to go private or never going to go public. And so to access them, they need to get into the private markets.
So then what does success look like, not for Aera, but for the IPO market overall, in how Aera might perform once it starts trading? I mean, not lower, of course, but is rocketing higher necessarily a bad thing?
I think you just need stability. I think you're right, that we need to start seeing some non-retail driven, non-name brand, just good fundamental businesses get through that IPO window and be stable. And stable to me means they come out, they hold price, and then they slowly begin to move up. I think this notion that everything should rocket or move or be incredibly fast, I think that's been one of the detriments of the public markets today for the retail investor. And so they struggle with that sort of volatility and trying to kind of chase that next winner.
So how much, and I'm going to stick with that thread here, because you did talk about the retail capital that is flowing into the private markets increasingly. We're seeing that build out of private wealth management among quite a number of firms right now that focus in and play in the private markets. I wonder if you expect that that's going to continue, and what that does to the dynamics in the public market when you do see something like an IPO in the future.
I think it's going to be, we are at the very, very beginning of what is going to be a very long game of a lot of capital moving from the private wealth sector out of publics into privates. If you look at kind of long-term performance of institutional investor and retail investor, the institutional investor has generally done significantly better. Why? Because they've actually had access to the private markets. The retail investor, kind of up until this point, has largely been kept out of it. Unless you're an ultra high net worth individual or a family office, the private markets have not been accessible to kind of the average retail investor. That, as you note, is changing. Better products, better pricing, better accessibility, better access to platforms. And I think those long-term performance trends that those of us in the private markets have seen for decades of the private markets significantly outperform the public markets are now becoming better understood by the retail investor, and we're beginning to see that flow of capital start. It's early, but it's already very significant, and I think where it's going to go is going to be incredibly significant.